Hi, folks. Nick here, recapping the week ending 6/26. Boy, it looked like it was going to end on a sour note. I mean, prices fell hard. This is the S&P 500 today. Zooming out, it fell hard, bounced hard, and then meandered, and then fell out of bed right here. And I think the culprit was Apple. Apple was messed with this week. There's no reason why it should be this volatile, and it messed with us, and it almost lost this line, which that would have opened it up for a little more downside. All right, so what happened as far as today? We started out today, what is that? We started out today by being whipsawed by Greek headlines, yeah? And the rhetoric has become so violent and angry. I mean, they use threatening words. So it's not a healthy environment. So around 9 o'clock my time, so a couple of hours into the trading, 2.5 hours into the trading, what happened was the Greek situation got punted until the weekend, so we knew nothing was going to come out. So then the traders focused on rates and a rate hike, and you can see it in the fact that the 10-year rose, took center stage, I should say, and people looking at it like, oh my gosh, we're pricing a rate hike already, and things are looking good. So then that put pressure on the markets. Good green shoots, though. The Dow closed green, legitimate green close. Legitimate, by that I mean people started saying, okay, it's Nike, which is down here, you can't see it, it's up 4%, that's what's rising, causing the whole rise. CNBC was on the horn saying that, and a lot of you thought that that was the case. Well, guess what? If you think this little box was up 4%, how about this big box being down almost 4% at one point? So wouldn't this bigger box offset this pop? So these two offset each other, even though it's actually more red than green. You're ignoring the up in J&J, Merck, UNH, Disney, Home Depot, CVX, JP Morgan, Verizon, Goldman Sachs, Walmart. You get the idea. Triple M, Visa. We had strength everywhere in the Dow. That's a legit green Dow today, 0.3 green. So for a bad day, it's actually not that bad. I think today was a win for the bulls. The bears I told you, the bears have been lazy for the last year. They don't put them away. They have them up against the rope. They don't put them away. The NASDAQ was down almost 1% at one point. Why? Because of this box right here. Micron was down 18%. Intel was down 4%. So the whole chip sector was down huge. Look how big of a box the whole chip sector is. If they're down 5 and 10 and 3 and 2%, that whole box is probably down 5% on average. Easy. It's like Apple being down 5%. And the NASDAQ only closing down 0.6. Wouldn't that be positive? It is. We had strength in strange places, Facebook, Comcast, Starbucks. So we had weaknesses, strong weaknesses in strange places. Baidu, China related, probably. Yahoo, probably Baba related, which is China related. Netflix, downgrade here, people booking profits. A lot of, except for Regeneron, the biotech healthcare slash, it was red. So for a red day, it ain't so bad, as they say in plain simple English. Look at the S&P. That's the 100. More green than red. The S&P closed flat, down 0.03%, so down 70 cents on the index, SPX. There's more green than red. So it's not a bad way to end the week. All right. So what other green shoots do I see? The small caps, 2 days in a row, look, strong closes, stronger than the broader averages. Apple held its trends. There's plenty to celebrate in today's price action. All right, so enough with today's price action. Oh, let's see for the week where we ended up. Let's go to charts. These are weekly candles, folks. We've got the S&P, SPY, the Qs, which represent the NASDAQ, and the IWM, which represent the small caps. Oh, and by the way, mid caps were up 0.15%. And okay, we've been meandering for a few weeks now. This in all indices. The one that had a ramp, but it came from a drop, were the small caps. We had 7 weeks of growth. and this week ended up red. So all 3 weeks are red. All 3 candles are red for weeklies. This is weekly candles. However, we set a new high in the IWM. So now, is this a temporary pause or a rest in order to attack? Okay, so it is possible that we're going to reattack. I'm not sure, but I'll tell you one thing. Monday we will have a headline to trade. Why? Because over the weekend we're going to have tumult. We're going to have a slew of headlines. The Greeks said that, Merkel said this, the guys said that. So tomorrow it's going to start. It's going to go through Sunday. So I can guarantee you that by Monday we will have something to trade. What does that mean? We will have a headline to trade. What I can't tell you is, what will the headline be? All right? I can tell you, I can write out what it's likely not to be, a Greek exit. I think everybody has enough on the line for everybody to find a way to punt. Greeks don't have anything to lose. They'll say, hey, we'll exit. But I think they need time, unless they've been preparing behind the scenes. So they need time. Merkel will find a way to stay face, and the Eurozone will find a way to stay face and say, okay, in order for us to maintain the sanity of the banks, so in order for us to support the banks in Greece, we're going to delay the decision give them time so everybody can come to a better decision, blah, 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 to better prepare for whatever eventuality. It'll be bearish, but it won't be a Grexit. So if I eliminate the nasty scenario from Greece, 2 things can happen. The world didn't end, and we'll have a pop in prices pre-open, okay, by just a can kick or a lack of decision. So that's one, or they'll actually have some sort of solution, and we will rally hard, but it will be relief pop that the world didn't end. I'll give it room, but I'll eventually short it. Now we may have a nasty scenario where the Greek rhetoric got pushed another day and it was negative. Then we will sell off a little bit. However, we have been catching those sell-offs, we as in the markets. And let's say on the SPY, 205 has been a good catch. In the Qs, 105 has been a good catch, and I'm pointing at the levels. In the IWM, well, it's all a good catch because we're going up and away. So I think we will find footing is what I'm saying. Now, once that headline is off the table, and I hope it's off for a long time, then we can go back to trading sentiment. Sentiment centering around what will Yellen do in the next few months. I think then that we have the economic reports that come out. We have a huge number we have a lot of them. The calendar's full, I should say. We have the Eurozone rate decision to make. They're not going to rate hike. And also Draghi speaks on Thursday. He tends to move markets. More often than not, he's bullish markets. And also we have ADP, which gives us a peek on the Thursday report. It will come out early because we're off on Friday in the U.S. So the report will come out early, and it will move markets. How? The coin flip. Why? But I think if we get good numbers, we will look at it negatively because Yellen will have fewer and fewer excuses for delaying the rate hike. And then there'll be talk of September rate hike, October, December, whatever. It'll be this year rather than next year. That's what I've been saying. So good economic reports might move us negatively, might have a negative impact on the markets. But it should be catchable as long as we keep our wits as a market and hold the 2050 line. So how do you trade next week? You don't need to trade next week. Next week is a dangerous trade. It's a short period of time with huge volatility and potential, and huge potential giant whooshes up and down, and that could get hurt. Hurt a few of us traders. Who can trade it? Somebody who's plastered to the screen and can accept the loss and takes the risk, a calculated risk. So do I need to sit and do nothing? No, I can still do some stuff. Long range. I can step out, and all these long range trades I'm talking about. If I have a trade that's working well and it's long range, I may choose to add to it. I may choose to add a hedge to it by doing the other side. So if I have a long-range credit put spread that's been working well, why not marry it with a long-range credit call spread that actually makes it into an iron condor at a very safe distance from current prices and time? So I don't just have to sit idle. I can add potential future profits by doing credits. That's the beauty of credit spreads. We can trade a range and choose the time with which we want to play it and choose the safety distance, how far from current price. I'll give you an example. The RUT is currently at 1279, 1280. So the RUT is at 1280. I can go out to December and short it in the 1400s. That gives me another 10% at least of movement that I can withstand without getting hurt. Why would I do that? Because let's say I'm already long the RUT via a 975, which is off the chart down here, credit put spread. So now I have an iron condor that gives me about plus or minus 20% moves, and I'll be safe between now and December. So these are trades that I just set and forget, almost never forget. But I don't have to babysit, is what I'm saying. You know, I can have a 10% drop in the market and not be safe. I'll show some red on my P&L, but nothing that I can't handle because they're out in time. So I don't have to sit idly and do nothing. I can still do something. All right. So this is the, and you can do the same with the IWM or the SPY. You just, if you need more help with that, yeah, just ask. Just ask. I'm more than glad, more than happy to help. Okay, so this is what traders can do in the meantime. Next week will be volatile, or has the potential to be volatile. Therefore, it's not a shame for anyone to sit it out. As far as Greece is concerned, the stupidity is huge. For example, everybody says, oh, it will be in arrears. The Greeks are already in arrears. They missed 3 payments already. They had 6.5, 6.15, and 6.19 payments of like, you know, hundreds of millions that they skipped on. They said, oh, we'll make a big payment on 6.30. Well, if you owed the bank and it was due on 6.5, and you can't say to the bank, I'm not going to pay you today, but don't worry, I'll pay you in a few days. They'll say you're late, and they'll record it. You're in arrears. So technically, they're already in arrears. But so I don't know. I hope people realize that. All right. The rhetoric has been ugly. You know, the words they're using are just nothing. Anyway, it's just ugly. So the situation, the Greek situation, is unfortunate mostly to the Greek people. They're suffering the consequences. I do hope for their sake and for our sake that they'll be off our screen so we don't have to look at them for a while. All right, so let's look at rates. This is important. I'll show you the 10-year, for example. Why is it important? Because look, when it was up here, it had just touched my first target, which triggered the potential second target is somewhere up here, and then it fizzled out, and here it is back at it again. And this is an area of failure before, so let's see what they do with it. I don't think markets like rising rates a lot. They'll get used to it after a while, but for a short period of time, I think it will have a negative effect on the market. And that's where the good news, bad news thing. Good news for the economy means rising rates because it's bad news because the likelihood of Yellen raising rates increases, which increases rates. That's what you're looking at right here. Conversely, the TLT, which represent the bonds, they'll do the opposite. And now you can see, if you consider this a neckline, looks like a head and shoulder, right? Shoulder, head, shoulder. So potentially we could be headed to 105. So I'll put a bubble here just to remind me that we talked about it. All right, so that's it. I don't anticipate the ranges changing this week. We said we published our ranges. I'll do the report card later. We're like pennies away from our goals in a lot of them. So that's pretty impressive in such a headline-driven environment. All right, Nick signing out. If you have any questions, please let me know.